Hello friends, we'll be discussing certain different illustrations related to issue of debentures now. Now, in this scenario, or rather in this illustration, we'll be discussing three different case studies. As you know that debentures are issued at par, premium and discount altogether. Now, we'll be passing the journal entries for all these three different cases. That means you will have three different questions in one illustration itself. Yes, that's correct. So one will be for par, second will be for premium, third will be for discount. We'll have in-depth journal entries for all these three cases and we'll figure out how exactly this works here. So let's start with the case 1, case 2 and case 3 as we need to discuss all three of them. Now the case 1 that we have for discussion refers to Progressive Company Limited. The company issued 40,000 10% debentures of rupees 100 each and they were issued at par. That means face value 100, issue price is also 100 here. Now, these shares were redeemable at par after 5 years. That means after 5 years, this specific share, whatever we are being, or rather these specific debentures, whatever we take into consideration, has to be redeemed out or rather paid back to all the customers. Now, the application, rather, this 10 rupees was divided into features like this. Rupees 70 was payable on application, 20 rupees was paid on allotment, and 10 rupees was paid on final call. All the debentures were paid off, and or rather we can talk about all debentures were fully subscribed and were fully paid for. This is case 1. Let's go on to the case 2 now. Now, the case 2 refers to Samsung Limited. That means Samsung Company Limited here. Samsung Limited issued 6,014% debentures of rupees 100 each. However, they were issued at a discount of 10%. That means 10% on rupees 100 will be equivalent to 10 rupees discount here. If the face value is 100, you are issuing it at 10 rupees less. That is rupees 90 you are issuing it. So the issue price is less than the face value here. Now, this 90 rupees was payable as follows. 40 rupees on application, 30 rupees on allotment, whereby the discount has been adjusted, and 20 rupees on final call. All the debentures were fully subscribed and they were fully paid for as well. This is the case 2 details that has been provided to us. Let's go on to the next case, or rather the last case here. Now the case 3 details refer to Z Limited, who issued 5,000 12% debentures of rupees 100 each at 10% premium. That means at rupees 110. Now, this was payable as follows. 25 rupees on application, 40 rupees on allotment, and final call rupees 45 here. Applications received were for 7,500 debentures and they were adjusted according to the pro rata. That means additional 2,500 was taken into consideration and pro rata allotment was provided. That means 7,500 applicants were given 5,000 allotment here. Now, all sums that were due were received on time. These are the three cases that we have to discuss further. Now, when we're discussing all these three cases, we'll make sure that with every journal entry, we prepare a balance sheet for your reference. So, we'll make sure that balance sheet is there with every case that we're going to discuss. So, let's start with case 1 now. So, the journal entries that we'll be passing right now will be referred to case 1 journal entries, which is issued at par and paid at par itself. So, let's start with that first. So, the case 1 refers to Progressive Company Limited, who has issued certain debentures. That means they must have received certain application money. So, let's start with the receipt of application money first. Now, Progressive Company Limited issued 40,000 10% debentures. So, the application money will be multiplied by 40,000 shares here. So, let's pass the entry for application money first. Now, on application, Progressive Company Limited was taking 70 rupees. So, 40,000 multiplied by 70 will be the receipt of application money. Now, whatever entry we have received here, or rather, whatever receipt we have received here, we have to move it to the debenture account. So, debenture application now will be moved to debenture account here. So, application money has been moved to debenture account. Now, the next will be receipt of, or rather, due of allotment money here. Now, these people are taking allotment money of rupees 20 here. So let's mention that 40,000 multiplied by 20 will be the expected amount of allotment that we're supposed to receive. Now, the next entry will refer to receipt of allotment money. So let's pass that entry now. Now, after allotment, the last entry, or rather the last two entries that we have to pass here is due of final call and receipt of final call. So let's pass that entry. Post it will go on the preparation of balance sheet. So final call due has been mentioned here. That is debenture final call account debit to 10% debenture. The next entry, or the last entry that we're supposed to pass here, is receipt of final call, which will be bank account debit to debenture final call account. So the same thing has been mentioned here. That means bank account debit to debenture final call. Now the next thing that we'll be preparing here is the preparation of balance sheet. In balance sheet, make sure that there are only two items that will be mentioned. First will be the debenture account. Second will be the bank account, because there is no other thing that can be taken into consideration as of case 1. So let's start with the balance sheet preparation. So while we are preparing the balance sheet, the first case will refer to 10% debentures. Let's mention the amount there. So case 1 balance sheet has been prepared. It's a simple balance sheet that will be prepared here. That means whatever share, or rather whatever debenture capital we have, that will be equivalent to the bank account, because there are no big transactions, no complex transactions, no other transactions mentioned here. So this is it, what we had to discuss. Let's go on to the case 2 now, whereby we discussed about premium and discount. Let's start with that. Now, this case 2 will refer to Samsung Company Limited, whereby we have mentioned that this is the case of clear discount. So let's start with the application money received, because discount or premium, everything has to be dealt with in terms of allotment itself. Hence, application received and transferring that application to debenture will be equivalent entries. So let's start with that same thing. Let's start with case 2, Samsung Limited. Now, Samsung Limited has issued 6,014% debentures. That means receipt will be for 6,000 shares here. So let's start with the receipt entry. Now, when we're talking about 6,000 shares, 14% debentures here the application money has nothing to do with the discount, because discount has to be dealt with in terms of the allotment. So everything will be dealt in terms of allotment. So the application money will be clear as this: bank account debit to debenture application. Let's start with the thing then. So on application, they were taking 40 rupees. So 6,000 multiplied by 40 will give you the amount of application receipt. Now, whatever application we have received, we have to transfer it to a debenture account. Let's transfer that now. So the second entry will refer to application being transferred to 14% debenture here. Debenture application account debit to 14% debenture amount has been transferred. Now, the next will be allotment due. Now, as there is allotment due, we understand there is certain discount that has been taken into consideration. So the face value of this allotment will be 40 rupees. However, the receipt will be only 30 rupees. So the other 10 rupees loss, or anything that we can call it, that is the discount offered here. Now, what we're discussing here is the allotment due. So debenture allotment will be debited here, and along with that, it will be discount on allotment will also be debited with the total amount of being transferred to 14% debenture. Let's pass the entry then. Now on allotment only, they are taking 30 rupees. That means total value is being 30 multiplied by the number of shares that we have. So total allotment money will refer to 40 rupees, out of which capital is only 30, 10 rupees is the discount. So we have mentioned that. Let's mention the total entry here. So ideally we were expecting 2,40,000 here, but we won't be having that much because somewhere the amount will be missed out. So in total, we are receiving only 1,80,000 because 60,000 is the discount that we have offered here and which has been adjusted in allotment. Now, as all these shares were fully subscribed and received for, hence there are no calls in arrears, let's mention the receipt of allotment money then. So the total amount is bank account debit to debenture allotment 1,80,000, because unlike premium, we won't be adding this amount here. We'll be subtracting that much of amount. So we've received that much of amount here on terms of allotment. Now the second last entry will be final call due, and the last entry will be receipt of final call. So let's pass both these entries now. So on debentures final call, we are supposed to take 20 rupees per debenture, that is 6,000 multiplied by 20 rupees here. So 1,20,000 is the amount that we have received here. Now let's go ahead and figure out the total details that we have to mention, or rather in the receipt of the final call. That will be the last entry in case 2. So the last entry has been also passed, which refers to final call receipt. Now the next step is to prepare the balance sheet here. Let's prepare the balance sheet of case 2 now. Now, when it comes to case 2 balance sheet, we have 3 items to mention: bank account, the 14% debenture, and a miscellaneous expenditure which refers to discount on issue. So let's start with that. So as you can see, 14% debentures total is 6 lakh rupees. Bank account total is 5,40,000. This we have derived from the journal entries that we have passed. Now there is one item that is pending, that is discount on issue of debentures, which is a miscellaneous item. Hence, we'll be mentioning it on the asset side here. So this will give you a total balance sheet tallied to 6 lakh rupees. Now, case 2 and the balance sheet has been done. Now is the time to prepare the last case details. That means case 3. Now, the case 3 refers to Z Limited, who issued 5,000 debentures, but the application received was for 7,500. Now, here we are supposed to take the applications for 7,500 itself. However, the allotment has to be done for 5,000 total rupees, or rather 5,000 debentures. Let's start with the first journal entry then. Receipt of application of debentures money. Now, Z Limited was taking application rupees as 25. Hence, or rather, we will talk about when this 100 rupees debentures is being issued, it is being issued at a premium of rupees 10. That means 110. So 25 rupees on application. We received an application for 7,500 shares. So here the first entry refers to receipt of application money. Now, out of this 7,500 debentures what we have received, only 5,000 will be allotted to share, or rather debenture application. Less 2,500 additional money that we have received will be taken care by debenture allotment. So let's start with that. That means transfer of debenture application money to debenture account. So we have totally received 1,87,500, but that is not related to only debenture application. It includes some amount related to debenture allotment also, rather adjustment that can be done in debenture allotment. So let's start with that. That means total amount of 5,000 multiplied by 25 on application will be only transferred to debentures account. So, in this question, debenture application amounted to 1,87,500, out of which actual debenture application for 5,000 shares was only 1,25,000. That means additional 62,500 can be utilized for debenture allotment. So, for example, if we're supposed to receive 1 lakh on allotment, we won't be receiving 1 lakh on allotment, because out of that 1 lakh, 62,500 we have already received here in application. Hence, pro rata was considered here. Let's mention the narration now. Now, the next entry will refer to allotment due, which will have premium into consideration. Now, on allotment, the company is taking 40 rupees. That means 5,000 multiplied by 40 is what we are expecting in total, which includes 30 rupees of debentures and 10 rupees of premium. Now, allotment has been due here. Next thing will be to receipt of allotment money. Here we can adjust the additional amount. 2 lakh is what we were expecting, but we won't be getting complete 2 lakh here. Let's mention the entry here now. So 2 lakh is what we were expecting in total. 62,500 have already received in application. Balance will be received in the bank account. Now the second last entry will be referred to final call due, and the last will be receipt of final call. Let's pass both these entries now. Now on final call, we are supposed to receive 45 rupees. So that is total of 2,25,000. Now the last entry will be receipt of final call. Now that we have cleared all the entries, it's time for us to prepare the balance sheet, which is the last part of this illustration. So the first thing that we'll be mentioning here is the bank account. That means cash and cash equivalent. So the total of balance sheet, what we have figured out here is 12% debenture equivalents to 5 lakh rupees, 5,000 into 100. Security premium is equivalent to 50,000 rupees. So total of liability side is 5 lakh 50,000. Now, similar to that, on the asset side, we have cash and cash equivalent, that is bank balance, which amounts to 5,50,000. Hence, liability is equivalent to asset. So, I hope all these three case studies have made you realize how the entries are supposed to be passed in terms of issue at par, issue at premium, issue at discount. So, thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.